dear students, welcome to the first session on the chapter Final Accounts of Companies. Here in this session, I am going to explain about the theory part of preparing the final accounts of companies. So let's begin the session now. As you know that today in India, companies are governed by Companies Act of 2013. Section 128 of Companies Act of 2013 says that every company shall prepare books of accounts as well as financial statements for every financial year, including that of its branch office or offices if any. So this point says that at the end of every financial year, according to section 128 under Companies Act of 2013, every company has to compulsorily prepare its books of accounts as well as financial statements. Okay, it is statutory obligation on the part of the companies to prepare the financial statements at the end of every financial year. In case of sole proprietorship or partnership firm, there is no statutory obligation to prepare final accounts as required by section 128 of Companies Act of 2013. So as you know that this Companies Act are applicable only for the joint stock companies. It does not apply to the sole proprietorship or partnership firm because they are governed by some other act. So that is why section 128, which says about preparing the financial statements, it does not apply to sole proprietorship or partnership firm. It is applicable only to the companies which are registered under Companies Act of 2013. Then next point says that the provisions of Companies Act of 2013 do not apply to insurance, banking and electricity companies which are governed by special acts relating to such companies. So those companies which are into the business of insurance or banking or electricity, they are governed by some special acts. So this section 128 is not applicable for such companies. So this 128 is applicable only for those companies who are engaged in business other than insurance, banking and electricity companies. Okay, then there are some legal requirements of final accounts of companies. Let's see one by one. First point says that the board of directors must present at every annual general meeting the following statements. The first one is balance sheet at the end of every financial year, and the second one is profit and loss account for that period. So these are the two basic financial statements which the board of directors must present before the stakeholders at the annual general meeting. The second point says that the books of the company should be maintained on accrual basis and according to the double entry system of accounting principles. So whenever they prepare the financial statements and books of accounts, they have to follow the accrual basis of maintaining the books of account, not cash basis. At the same time, they have to follow the double entry system of bookkeeping. Okay. Then the third point says the profit and loss account and the balance sheet must give a true and fair view of the state of affairs. It must also comply with general instructions given at the end of part 1. So this point says that whenever the company prepares financial statements, that is profit and loss account and balance sheet, they have to include only such informations which are true and correct, because after such financial statements are prepared, they are going to be presented before the stakeholders in the annual general meeting. Whenever it is presented before the stakeholders, that must represent the correct and fair view of the state of affairs. There should not be any manipulation. Otherwise, the stakeholders will be misled. Then at the same time, they have to ensure that whenever they prepare the financial statements, they strictly follow all the general instructions given at the end of part 1. The next point says a holding company must give a statement disclosing its interest in the subsidiaries. If you are preparing the financial statement of a holding company, they must disclose what is the percentage of shareholding they have in the subsidiary companies. Okay. Then fifth point says every balance sheet and profit and loss account of a company must be authenticated by its manager, secretary and by not less than 2 directors, one of whom must be managing director. So after they prepare the balance sheet and profit and loss account, so it must be authenticated by the manager or the company secretary. Along with that, that should also be authenticated by 2 directors. Okay, minimum of 2 directors, one of whom must be managing director. The next point says the financial statements must be accompanied by the report of statutory auditors to the shareholders. So it must be accompanied by report given by the statutory auditor. The seventh point says the financial statements must be accompanied by the report of the board of directors. Okay, so this is the second report which must be accompanied along with the financial statements. Eighth point says all of All the above documents are known as published accounts, and it must be sent to every shareholder, trustees, and debenture holders at least 21 days before the date of annual general meeting. Ninth point says annual accounts of listed companies will also include cash flow statement, corporate governance report, and management discussion and analysis. So, if you are preparing the financial statement of a listed company, that is whose shares are listed in the stock exchange, then they must also include cash flow statement, corporate governance report, as well as management discussion and analysis with regard to such financial statements. The last point says annual accounts listed in stock exchange outside country must also satisfy the requirements of those stock exchanges, which means that if you are preparing the financial statements of such company whose shares have been listed in the stock exchanges outside country, then they have to ensure that while preparing the financial statement they fulfill all the requirements of such stock exchanges which are located outside country. Okay, so these are the various legal requirements which every company has to compulsorily fulfill while preparing the financial statements at the end of every financial year, and these legal requirements are there according to Companies Act of 2013. Then let's see the financial statements of a joint stock company. According to Companies Act of 2013, every company has to prepare basically two financial statements, and the first one is statement of profit and loss, which is also called profit and loss account, and the second one is balance sheet. Along with these two financial statements, they have to also enclose one more document or one more statement, that is notes to accounts. Nothing but whenever they prepare the statement of profit and loss account and balance sheet, there are several notes from note number 1 to note number 30. How do we get the total of those notes? So that must be clearly prepared in a document. That document is called notes to accounts, and that should form the part of statement of profit and loss account and balance sheet. Okay, now let's discuss the format in which these two financial statements are prepared. Earlier, we used to prepare the financial statement in the horizontal form. So, in the T shape, if you take up the balance sheet, it used to look like this. On the left side, we used to write the liabilities, and on the right side, we used to write the assets. But now the format has been changed. We are going to just prepare in a table consisting of three columns. We are going to write first column. In the first column we are going to write the particulars, second column for writing the notes and note number, and then for writing the amounts relating to the current financial year, and the last column for writing the amounts relating to the previous year. But usually when you solve the question, this information will not be given, so we are going to prepare it in only three columns, that is one for particulars, second one for writing the note number, and third one for writing the amounts relating to the current financial year. Then coming to the headings also, first we are going to write the information or the data relating to liabilities and then relating to assets. One by one we are going to write. But now the main heading is also slightly changed. Earlier it was only liabilities, but now it is equities and liabilities. Okay, equities and liabilities, and then we are going to write the various items under that, get the total. The second heading will be assets, and then we are going to write the various item and get the total, and this is the format in which the balance sheet has to be prepared. Now coming to the equities and liabilities, that is the first heading, equities and liabilities. It is broadly classified into four subheadings. The first one is equity shareholders funds, the second one is share application money pending allotment, third one is non current liabilities. When I say non current, it is long term liabilities, and the fourth one is current liabilities. Coming to the first subheading, that is equity shareholders funds, it is not equity shareholders, it is just shareholders funds. Below that we have three items. The first one is share capital, then the second one is reserves, and the third one is money received against share warrants. So these are the three items which we see in first subheading. Then we have the second subheading, that is share application money pending allotment. The third subheading is non-current liabilities, that is long-term liabilities. Under that we have four items. The first one is long-term borrowings, the second one is deferred tax liabilities, third one other long-term liabilities, and the fourth one long-term provisions. Then coming to the fourth subheading, that is current liabilities, we have short-term borrowings, trade payables, other short-term liabilities, and short-term provisions. So let's see how do we write all this and what are the note number you have to allot to these items. So this is the format in which we are going to prepare the balance sheet. On the top, we are going to write the name of the company. In the next line, balance sheet as on some date. So as I said, we are going to prepare it in a table consisting of only three columns. First column for writing the particulars, second column for writing the note number, third column for writing the figures relating to the current financial year. The first heading is equities and liabilities. Under that, as I said, there are four subheading. First one, second one, third one, and fourth one. Okay. First one is shareholders funds, second one is share application money pending allotment, third one is non-current liabilities, and fourth one is current liabilities. Under the first subheading, we have share capital with note number 1, second one is reserves and surplus with note number 2, then money received against share warrants. It does not have any note number, we are just going to write that item. Then coming to the second subheading, share application money pending allotment. It means that the application money has been received by the company, but the allotment of share has yet to be done, has not been made. Okay, it is yet to be allotted. Then the third one we have non-current liabilities, which means long-term liabilities. Under that we have four items: long-term borrowings with note number 3, deferred tax liabilities with note number 4, other long-term liabilities with note number 5, long-term provisions with note number 6. Then we have fourth subheading, that is current liabilities. Under that we have again four items. The first one is short-term borrowings with note number 7, trade payables with note number 8. Then note number 9, we have other current liabilities. Note number 10, short-term provisions. So when you take the total from note number 1 to note number 10, that will give you the total of liability side. Then we have second heading. So under second heading, that is asset, it is broadly classified into two types, that is non-current assets and current assets. Under the non-current assets, you have five items, that is first one fixed assets, second one long term investment, third one deferred tax asset, fourth one long term loans and advances, and the fifth one is other long term assets. Again coming to the fixed assets, we have four divisions. The first one is tangible asset, second one intangible asset, third one capital work in progress, and the fourth one is intangible asset under development. Then coming to the second subheading, that is current asset, we have again six items here. The first one is short term investment, the second one is stock or inventory, the third one is trade receivables, then we have cash and cash equivalents, then short term loans and advances, and the last one is other short term assets. So here let's see one by one. So under the head assets, we have first subheading, that is non-current assets. The first item under that is fixed assets with note number 11. Under that we are going to write the items like tangible asset, intangible asset, capital work in progress, and intangible asset under development. Then the next item is non-current investment, which has note number 12. Note number 13 is with regard to deferred tax asset. Then note number 14 is long-term loans and advances. Note number 15 is other non-current assets. Then you have second subheading, that is current assets. Under that you have six items. First one is current investment, then inventories, current investment with note number 16, inventories note number 17, trade receivables note number 18, then cash and cash equivalents note number 19, short term loans and advances note number 20, and other current assets with note number 21. So when you take the total from 11 to 21, that will give you the total of asset side. So the total of asset side and total of liability side must tally in the balance sheet. Okay, so this is the format in which we are going to prepare the balance sheet. So what are the items we have to include in each note? I have already given the format in the Google Classroom. Go through that so that you can understand which items have to be included in which note number. Okay, then let's see the format in which the profit and loss account is prepared. So this is the format of profit and loss account. On the top, we are going to write the name of the company. In the next line, profit and loss statement for the year ending dash. Again, we are going to prepare this in a table consisting of three columns. So here again, in the first column, we are going to write the particulars. In the second column, note number, and third column for writing the amount relating to the current financial year. So as you know that profit or loss, it is the difference between the revenue and expenses. So the statement begins with the items relating to revenue. The first one is revenue from operation, nothing but we are going to write the sales here. Okay, and that carries note number 22. Then one more item is relating to other income with note number 23. So there are only two notes, 22 and 23, relating to revenues. When you take the total of note number 22 and 23, that will give you total revenue, which can be written as first Roman number. Okay, then you have below that expenses. Under expenses you have several notes. Under that, first one is cost of material consumed with note number 24. Then you have 25 with the regard to purchases of stock in trade. Then note number 26 is changes in the inventories, where we are going to compare, or we are going to have the difference between the opening stock and closing stock. Note number 27 is employee benefit expenses, where we are going to include wages and salaries which are given to the employees. The next one, 28, is finance cost. So this is the cost of borrowing finance, that is interest on bank loan or interest on debentures, etc., which are paid during the current financial year, paid as well as outstanding. Okay. The next one, depreciation and amortization expenses with note number 29. Here we are going to write the depreciation charged on the various fixed asset, as well as if there are fictitious asset, and if certain portion of that as written off during the current financial year, that will be taken as amortization expenses. That is going to be included here in note number 29. Then note number 30, all other expenses which you could not include from note number 24 to 29, all such expenses must be written in note number 30. So these are the notes which you have relating to expenses, that is note number 24, 25, 26, 27, 28, 29 and 30. So when you get the total from 24 to 26, this total is called total expenses, which can be written as Roman number 2. Okay, in the next line, as I said, profit or loss is the difference between the total revenue and expenses. In the next line, we are going to write profit before exceptional item, extraordinary item and taxes. So where we are going to take the difference between Roman number 1 and Roman number 2, that is revenue minus expenses. Okay, then in the next line, usually in the exam a question, they will not give you the exceptional items or extraordinary items, but as per the format, we are going to write it, and in the amount column we are going to write it as nil. Okay, in the next line you have to write exceptional items, which is nil. We will have the balance, which is called profit before extraordinary items and taxes. In the next line we are going to write the extraordinary items. Again, the normally the amounts will be nil, so we are going to again have the balance, which is called profit before taxation. Okay, in the next line we are going to deduct the tax expenses, like if you have made the provision for taxation, or if they have given deferred tax assets, such items have to be written here under tax expenses. Then again we are going to have the balance, which is called profit or loss from the continuing operation during the current financial year. So that will be the end of statement. We are not going to continue with the statement. So here whatever the final balance you get, that itself is the profit or loss during the current financial year. Okay, so here you find the explanation to the notes which are included in the profit and loss account, that is relating to both revenue and expenses. Please go through this explanation so that you can easily understand what are the items to be included in which note number in the profit and loss account. Okay, you have to be very thorough with this format, otherwise it will be very difficult for you to solve the question. Please go through this format before we take up the solution in the upcoming videos. Okay, that's it for this session. Thank you for watching. Let's meet up in the next class.